Welcome to this week's market drama. We'll start with the S&P 500, which was down 1.7% for the week. It is up 13% for the year. NASDAQ was down 1.4% for the week. It's up now 29% for the year. The biggest headlines on the positive side, we had housing starts for May come in much better than expected. In fact, ground breaking on U.S. single-family home building projects surged by the most in more than 3 decades. And permits for future construction also climb, right? So that's kind of forward-looking and a positive indicator. Now, it's worth mentioning that multifamily construction projects were also a big reason why housing starts are and housing overall is still doing well. And a lot of that multifamily construction projects were their financing was secured last year prior to kind of banks starting to slow down lending. So a lot of these gains that we've seen now are kind of the result of that funding done last year. So we should see some leveling off as the year progresses and new financing becomes harder to obtain, right, for new housing to starts to begin. There was also flash PMIs for services and manufacturing. On the services side, it did better than manufacturing. Manufacturing continues to disappoint, right? The results were below 50, which means basically contraction of manufacturing activity versus for services, it was above 50, right? Which means it's growing. And that's been the story. Services holding up much better than manufacturing. The other headline that I think is a fairly big reason as to why the markets might have sold off this week is that Fed Chair Powell testified both in the House and Senate, and both kind of prepared remarks really indicate towards the continued effort on fighting inflation and keeping rates high enough to bring down inflation, right? So kind of every time the Fed kind of mentions things like this, it definitely kind of cools off the market as the market continues to believe, right, that at some point in this year or early next year, they'll lower interest rates. Chair Powell, once again kind of emphasize that the Fed, if the economy holds up, they're going to keep interest rates high or even make them even higher to bring down inflation. When it comes to next week, we have May core PCE data coming out. The year-over-year number is expected to be 4.6% versus last month it was 4.7%. Anything related to inflation is always going to be something the market's going to pay attention, especially considering that the Fed really likes the PCE number as a proxy for inflation. So stay tuned for that. See you next week.